What's up? It's your boy Lisiwa Mutupi came back on the Forex Jesus 2.0. This is the second topic whereby we're going to be speaking about how to know when to actually place a buy or a sell position. Okay. So now, if you actually understand what the topic would just understand the topic, like there's most people that don't even know how to it doesn't even have to be executing the trades of buy or sell, but how buy works and how sell works. Like, what's the whole concept behind buying the markets and what's the whole concept behind a bearish market? As you know, it's bullish and bearish. So I'm going to start with the first point, which is to look if the market is forming a lower low or higher highs. Basically, let's say if the market is forming lower lows, you do know that we're starting to look for bearish, like for sell opportunities. And if the market is forming higher highs, that's when you start to look for buy opportunities. You can't say that you're waiting for a retracement or a reversal or whatever, and then you start to place a sell on a higher high movement. That's just going totally opposite and against the trend. Okay, so the second point is you need to pay attention to the momentum of the markets from a current market price. So basically what this means is that, like, when you pay attention to the momentum of the markets from a current market price, you need to be able to see if the momentum is either to the upside or to the downside. And we see this from the bigger time frame, which is the daily and the weekly, the daily and the weekly. That's when we'll be able to see that there's a lot of bearish candlesticks. So why would you want to be looking for a buy in a bearish momentum, whereby even if you place a buy, it's going to be a short-term profit, but then in the long-term run, if you're holding it for more than 2 hours, it's going to be negative, So we don't want that. We're not. I'm speaking to the ones that are not actually scalping, because I focus more on swing trading, holding my trades for a few hours, for a few days also. So you need to also pay attention to the momentum. That's the most important one. Let us jump onto the third the third point, which is always aim to buy low and sell high. Let us jump into the markets and I'll show you the real example. So basically what I'll do is that I'm going to jump onto the screen and then show you what it is that I mean when I speak of this. But you should aim to buy low and then you should sell high. But selling high doesn't mean that when the market is forming higher highs and then it's at the top, you just need to start selling. No, that's when we start to speak of things such as the multi-touch confirmation. We speak of things such as, like, on the bigger time frame, it was actually looking for it was actually a bearish momentum, and then now it's at the highest point but in a bearish momentum trend. So we do what? We get it at that highest point and then we go all the way downwards with it. But let us jump onto the charts and then I will show you what I mean. But before we jump onto the charts, I want us to go into the whiteboard and then I'll just show you guys quick on what it is that I actually mean when I speak of selling high. Selling high and then buying low. Okay, so now we'll be looking at the whiteboard just by showing you guys the points that I was speaking of and just dragging you guys along here so you can be able to see what it is that I mean. So first thing would say that we want you to know whether you are forming lower lows or higher highs. So basically lower lows would be price pushing downwards, going back upwards, pushing downwards, going back upwards, pushing downwards. You understand? So this is a lower low, this is a lower low, lower high, and a lower low because it broke the previous lows, and then this would be a lower high and obviously lower low. This is a downward trend. So with an upward trend it's a bit more different. Okay, with an upward trend it's actually higher highs. It's a high, higher low, higher high, higher low, and a higher high, and so on. This would be a higher high, it's higher than the previous one. This would be a higher low, it's higher than here but it's actually lower than this one, the higher high. So this one would be a higher high, higher low, and so on. So basically what we want to do here, I saw with the next point that is coming next, is that we say basically what you have to do is that you have to see the momentum of the market. The momentum would be the prices pushing upwards, now as you can see, forming clear higher highs. And now buying low, so we speak of buying low and then we speak of selling high. So basically what buying low would mean is that, okay, let me just remove this quick. Buying low would simply mean that price pushed from the new higher highs, higher lows, higher highs. It formed new higher highs and higher lows and now higher highs. So now let me just do this. So basically I want you to look at facts such as like support, resistance turning into support. So you'd see here that there was a clear resistance area, so price broke out of it impulsively. Now it's coming back to retest. Most likely, most chances, this new form is going to be your new higher low structure. So once it gets to this point, like this should be, we're looking for now a higher low. It should be a point that we're looking for a higher low. So once it gets to this point, that's when we start to look for candlestick confirmations and things such as that to go all the way upwards. So that's when we speak of buying your price when it's low, because it's the higher low, it's the highest but lowest point. So now when it's pushing upwards, it's going to create new higher highs. Obviously your target would be an all the way to the upside. Also, one thing that I like about this buying low and selling high would be this: just by having a trend line here. Having a trend line here, you can simply see that we've got our first, second. Now at the third touch, you can even take a buy trade somewhere. It depends on also the candlestick confirmation that it gives you. This is the lowest point, because if it breaks out, it means that it's now invalid. It's an invalid setup. So we're not looking for it to break out. We're looking for it to just continue to go to the upside. So this is what I mean when I say you have to buy low. You buy when prices at the low. Obviously, you don't know. It's not like prices gonna push. Then you're like, oh, it's at the low. Let me buy. Then you buy. Then goes. No, it doesn't work that way. You have to have a detailed plan on how you're actually gonna be buying low. So selling high would be price coming lower low, coming a bit upwards, lower high, pushing down, breaking the previous lows, coming back here, lower high. And once it gets here, we start to look for things that are gonna allow us to believe that, okay, now this is a lower high, which should be like engulfing candlesticks, which should be a rejection candlesticks, whatever. But as you can see, this was previous support. Now it's turning into resistance. And just by adding a trend line here, you'd also see that there's also a third touch, which adds up to what we are saying. So just by taking a price here, a sell here, you're basically selling it while it's still expensive, while it's still high, believing that it's gonna break the previous lows and then it's gonna form new lower lows. Do you understand? So it's going to form new lower lows. So this is what I mean when I say you have to sell high, sell when price is a bit more expensive. Because once it's expensive here, it will never be this expensive. It's going to go lower low, lower high, lower low, lower. It will never be this expensive. You understand? So that's one thing that I wanted you guys to take a look at. But that's it. And let us jump onto the charts and maybe see if we can spot a few of these movements. So I want to show you guys what it is that I was speaking of from the slide and also from the whiteboard. Basically what this happens is that with understanding the buying and selling method, you have to be able to know whether market is forming lower lows or lower highs. So just by looking at this, let me use this tool. Just by looking at this, you can simply see the market push downwards, lower lows, lower high, lower lows, lower high, and couldn't break the lower lows, but couldn't break the lower highs, which means it's within structure, broke the lower lows, now the lower highs, and so on. So we'll be able to spot what actually happens. This is a lower high. I mean, this is a high. This is a lower high. Our first lower high is here, second lower high is here, third lower high is here, which you can still get an entry, fourth lower high is here. And that's one thing that you should do. You should actually look for these points that are significant, and the points that, like, understanding the lowest points and where the direction of the market is going. After getting that, locking it down, you pay attention to also the momentum of it too. As you can see, the red candlesticks are aggressively going downwards, and the green candlesticks are just pushing a bit upwards in a correction manner. That's one thing that I want to say on this. So it's very much important for you to actually take a look at these points. And selling selling high would simply mean that since now this point is like the lowest high, this is the lowest high, just by having a trend line going through here, you'd be able to see that this is actually the lowest high. It's actually now it's at the highest point, but it's the lowest compared to the ones before. So it's at the highest point, but it's compared to the ones before, it's lower. So that's why we call it the lowest high. So you sell it when it's here, it's expensive. It's not gonna be this high. That's why it's a low high. It's not gonna be this high anymore. So you take advantage of it and then you go all the way down with it. So even here's another good trade. But obviously you'd need some confirmation too. But that's not something that I'll be speaking of on this video. But you can simply see as soon as we got to the lower high, it was also a touch on the points. Then you can see that you go all the way downwards with it, forming the new, believing that it's gonna go break the previous lows and forming new structure lower highs. So this is euro US dollar that we're looking at the bigger time frame, weekly, and I just wanted to show you guys what it means to actually sell low and buy high. Sell high and then buy low. So let me just try to look for any pair that may be short to the upside. Okay, gold here, gold. That's short to the upside. There we go. Okay, to get a quick example on maybe the daily time frame. So you can simply see with this one here, price pushed upwards impulsively, impulsive move, correction, and then impulsive move. So let me just do this, draw it out for you. Impulsive, correction, and then impulse to the upside. So what you have to do is that, with this being your first point, this being your second point, this obviously is your third point. So third point, confirming with the multi-touch confirmation, it makes sense. Like just by looking at it and then confirming with the multi-touch confirmation, third point means that it's gonna go upwards. So this is the perfect time for you to actually place a buy trade, because as soon as you're done placing that buy trade, let's say it depends on the signal that you would have got, but as soon as you're done placing the trade, stop loss would be, let's say, fuel limited, just below previous price. then your first target would be at the higher high. Okay, right here, this would be your first target, obviously 5%, way more than 1:3, and then so on. So this is how you actually sell when the price is a bit cheap. Doesn't mean price has to go all the way down for you to sell, to buy. Doesn't mean it has to push very much to the downside. It just has to give you the most cheapest form, the most cheapest price at weights at, and then capitalize on it, buy it, and then hold it up until it gives you more profits, and then sell it when it gets to the upside. So this is what it means to actually buy low and then sell high, even just by looking at structure. The support turning into resistance that I spoke of, just by having something like this. Okay, it's a red line here. So let me remove this quick. Just by having this was previous support, resistance, previous resistance. It broke out impulsively, came to retest, turned into support. You understand? So now it's supported, now it's low, it's at the low. This was the high, but now it broke out and then it came and created a low. So now we push all the way to the upside with it. So I hope that you guys saw this. It's the same one that I'll show on the whiteboard, the same method, the same concept. Just don't get confused just because you're seeing it on charts, and I hope that we make the best of it. But let us progress on to the next lesson.